Okay, let's think about home improvement for a sec. It's just huge, right? Such a big part of the economy.
Absolutely huge. And
Uh-huh.
when you talk home improvement, two names just dominate. Home Depot and Lowe's.
Exactly, they're the giants. So understanding them, well, it gives you this really valuable window into, bigger economic trends, maybe even investment ideas for some listeners.
That's the plan for this deep dive. We're really zeroing in on Home Depot, that's HD, and Lowe's, LOW,
Yeah.
especially because their earnings reports are coming up really soon.
Right, puts them right in the spotlight.
So we want to unpack their strategies, where they stand competitively, and what that might mean for investor value. We've got the Q4 2024 actuals, plus the Q1 25 estimates to work with.
Yeah, we've waded through a lot of the financial analysis, the growth numbers, the competitive stuff.
Mm-hmm.
The idea is to give you a clear, kind of digestible take on what's driving these two. So whether you're investing or just curious about the economy, you'll have the key info.
Okay, so first things first, those earnings dates. You want to know, Home Depot reports Q1 2025 on Tuesday, May 21st.
May 21st, got it.
And Lowe's is right after, Wednesday, May 22nd.
Okay, back to back. So what are the analysts expecting? What are the consensus numbers looking like for Q1?
All right, for Home Depot, the consensus EPS, that's earnings per share, is sitting at $3.56.
356.
Yep. And revenue estimate is $36.6 billion.
36.6 billion. Okay. And Lowe's?
For Lowe's, the EPS estimate is a little lower, $3.45.
345.
And revenue, $22.7 billion is the expectation there.
Right. So to kind of put those expectations in context, how did they actually do last quarter, Q4 2024?
Good question. So Home Depot's Q4 EPS was $2.82. That was actually a beat by about 3 cents.
Okay, a positive surprise there. Revenue.
Revenue was $34.8 billion, just a hair under what analysts were looking for.
Okay, slight miss on revenue. And Lowe's for Q4.
Lowe's EPS was $1.77. That was pretty much exactly in line with expectations.
Right on the money.
But their revenue, $18.6 billion, that missed estimates by about $100 million.
Which isn't huge, but still, yeah, a miss is a miss. Shows some pressure, maybe?
Exactly. So you can already see some slight divergences even in the last quarter.
And what's really interesting is how they're tackling growth now. Their strategies seem to be, well, diverging a bit, wouldn't you say? Especially after that, pandemic boom in home stuff.
Oh, definitely. Home Depot's making a very clear, very intentional push towards the professional market.
Right, the pro customer, contractors, builders.
Exactly. The renovators, the builders, they're pouring money into distribution centers specifically for them, expanding tool rentals.
Trying to lock them in, get that repeat business.
That's the idea. Build sticky relationships, get reliable revenue. It feels like they're betting on the resilience of that professional side, maybe less tied to, everyday consumer whims.
Makes sense. So Lowe's then, what's their angle?
Lowe's seems much more focused on the DIYer, the do-it-yourself homeowner. Big push on their website, the whole omni-channel thing, buy online, pick up in store, making it super easy for project-focused homeowners.
And they seem pretty focused on margins too, right? Profitability?
Very much so. Improving those profit margins seems key. And look, they might even be willing to let some pro market share go if it means better margins overall.
Interesting trade-off. So Home Depot digging deep with the pros, Lowe's may be more tuned into homeowner spending, which can be, well, more variable.
Exactly. Two really distinct paths they're taking. And you can see this reflected in some of the key numbers from last year, from 2024 year over year.
Okay, let's maybe put some of those 2024 numbers side by side, see how they stack up.
Yeah, good idea. So revenue growth. Home Depot's actually down 2.3% year over year in 24.
Okay. And Lowe's?
Lowe's dipped a bit less, down 1.5%.
All right. What about actual profit, net income?
Home Depot definitely ahead there. $14.9 billion in net income.
Wow.
Compared to Lowe's at $8.5 billion.
Big difference. And cash flow. How good are they at turning sales into actual cash, that free cash flow margin?
Yeah, Home Depot's stronger there too. 9.1% free cash flow margin.
Okay.
Lowe's was 7.5%. Still decent, but, lower.
In dividends for income investors.
Home Depot's yield is higher, 2.7%. Lowe's at 2.2%.
Okay. One more. How much are they investing back into the business? CapEx spending growth.
Home Depot ramped up spending more significantly. Their CapEx grew 8.5% year over year.
And Lowe's.
Lowe's increased it too, but by less, 5.1%.
So looking at all that, it kind of sounds like the analyst might lean towards Home Depot based on what we've seen.
Generally, yes. The analysis often points to Home Depot's stronger balance sheet.
Mm-hmm.
And a really key metric, Return on invested capital, ROIC.
Right, how well they use the money they invest.
Exactly. Home Depot's is around 38%, which is, frankly, very high. Really impressive efficiency.
38%. Wow.
But
Wow.
it's not totally one-sided.
Ah.
Because when you look at valuation, specifically the forward price-to-earnings ratio, Lowe's looks more attractive.
Okay, explain that. Forward PE, how much you pay for future earnings, essentially.
Right. Home Depot's forward PE is around 19.8. Lowe's is lower, about 17.1.
So 19.8 versus 17.1, meaning Lowe's stock is maybe cheaper relative to its expected earnings.
Correct. Some investors might see that lower PE and think Lowe's is potentially undervalued or more of a quote-unquote value play, especially if they expect consumer spending to pick up strongly.
Got it. So Home Depot looks stronger fundamentally on some metrics, but Lowe's might offer better value on paper right now. Interesting contrast.
It really is. And of course, it's not just these two competing against each other.
Right, you've got the whole competitive landscape. Like, Amazon's always lurking, isn't it? Especially for things like appliances, tools.
Absolutely a factor. Amazon and other online players have definitely made inroads, no question.
Uh,
But, it's still hard for them to match the in-store experience. Getting advice for a tricky project, seeing and feeling materials.
yeah, you can't really do that online. And delivering, like, a pallet of bricks or drywall, that's got to be tough for them.
Exactly. The logistics for bulky stuff still heavily favor the big box stores with their established networks. It's not as simple as ordering a book.
And then there are the smaller guys, too, right? Ace Hardware, Menards in the Midwest.
Yeah, don't count them out. They often have really strong local loyalty. People know the staff, trust their local store.
True. Maybe not the scale or efficiency of Home Depot or Lowe's, but that local connection matters.
It really can. And interestingly, speaking of regions, Lowe's apparently made some gains in 2024, specifically grabbing some market share in the South and Midwest.
Oh, really? How?
Seems like they did a good job tailoring inventory to local tastes. Localized marketing appears to have worked in those areas.
Interesting regional play by Lowe's. But overall, Home Depot's still king nationally, especially with the pros.
Yeah, Home Depot maintains that national leadership, no doubt, especially, like you said, among the professional builders and contractors.
Okay, so we've got the earnings calls coming up next week. What are the absolute key things you're going to be listening for from each company? What really matters?
Okay, for Home Depot, number one, that pro versus DIY sales mix. How is that balance shifting? Is the pro focus paying off of the numbers?
Got it. Pro DIY split. What else?
Second, SG&A leverage. That's selling, general, and admin expenses. Basically, are they controlling their operating costs effectively as sales move? How are those big tech and logistics investments impacting efficiency?
Makes sense. Control the costs. Anything else for HD?
And a third, just listening closer to what management says about the housing market. Any signs of recovery? What's the demand looking like for big renovation projects? Their commentary is key.
Okay, pro DIY, cost control, housing outlook. Clear. Now, for Lowe's, what's critical in their report?
For Lowe's, I'd focus on, one, traction in online sales. How well is that digital push working? And tied to that, how are their private label brands performing? That speaks to their DIY and value focus.
Online sales and private brands.
Okay. Two, cost management again, but maybe specifically in the supply chain. Can they show they're becoming more efficient there?
Supply chain efficiency. Got it.
And three, since we're heading into warmer months, any commentary on seasonal categories? Outdoor living, garden.
Yeah.
How strong is that looking? It's a good indicator of discretionary spending.
Right. The spring summer boost. Okay, that makes a lot of sense. So if we try to boil this down,
Yeah, let's synthesize.
Home Depot, their strength is that pro market focus, backed by really strong financials, high ROIC. They're the leader, especially with those crucial repeat customers.
Precisely. That's their core play.
And Lowe's, it seems like they're carving out their space with the DIY crowd, pushing value, maybe seen as the better valuation play right now, and working on efficiency.
Yeah, that captures it well. They offer a decent dividend, too, and might be positioned well if, say, the consumer side of housing bounces back faster.
So here's the question for you listening. Thinking about these different paths, Home Depot all in on pro, Lowe's leaning into DIY and value. Which strategy do you think fits better with where the economy is right now or where it's heading?
Yeah, why do you think one might thrive more than the other? It forces you to connect their business models to the bigger economic picture.
It's more than just picking where to buy a hammer. Right?
Definitely. And maybe a final thought to leave you with. It's kind of fascinating how this choice, this competition between two big stores, actually mirrors these huge trends in how we spend money, how the economy cycles, and even how people think about investing.
Yeah, it's way more than just hammers and nails when you dig into it.